Hey, I'm Charting Man Dan with the Chart Guys. We're going to check in on the broader market in this video as we get ready for Powell and the FOMC tomorrow. The daily bounce got some follow through. The weaker sectors that did not participate yesterday did participate today, but it's going to come down to the FOMC reaction to see if the bulls get enough space to try and shape up daily uptrends. Let's check things out. So we get some bounce follow through as bulls try and negate the daily bear flags, but we know we have Powell tomorrow. There's a 90 whatever percent chance that nothing's going to happen, 98% chance. And so it's going to be the forward-looking comments from Powell at the conference at 2:30 p.m. Eastern where we get volatility, keeping in mind that we only have an hour and a half in the trading day from when he starts speaking into the close. And so we look for Thursday and Friday for the big money movement reactions. We're certainly going to be volatile tomorrow, but in terms of where big money is going, we're watching for the reaction after the conference is done and into the next couple of days. If you did not see Joey's webinar yesterday, part 4 of his series, check it out. It's about correlations. Definitely need to watch all 4 of those videos if you are serious about trading. It's linked in the comments of this video. So SPY, the next hurdle is get over daily EMA 12. We have an hourly uptrend, and we started this morning watching the resistance zone on the S&P 500 and NASDAQ futures chart, and I was just marking the high of Thursday and the high of yesterday because pre-market, we rejected from that as well. And we had this uptrending support line, and this was an ascending triangle pattern, which is typically a bullish pattern, but definitely had to see the bulls prove it over resistance. And now we're back testing, so we'll see overnight whether or not the bulls are able to hold that level. But at this point, just watching the SPY hourly uptrend, knowing that when we lose it, it's the first indication that a daily lower high is being set. And we also watch for signs like hourly RSI getting over 70, an hourly rising wedge, or an hourly head and shoulders to help shape up that daily lower high. And again, that daily EMA 12 is going to be in play potentially tomorrow as well. NASDAQ, very similar. Dropped down, held the low of yesterday by 17 cents before the bulls showed back up. Same thing. A lot of space still in the daily downtrend. Daily EMA 12 is resistance. And so we're in a scenario where, I can remember in prior months or years where I would say bears need help on the FOMC reaction, but here it's the bulls that need help because if it's a bearish reaction and we set that daily lower high this quickly, we're going to be very quickly testing the lows of this drop. Whereas if it's a bullish reaction, we then have space to attempt an eventual daily trend change. So it's pretty important in the short term, the direction of the reaction over the next couple of days. NVDA, got to hand it to the bulls. We had bearish news overnight of, the potential of losing 20% of revenue if China, blah, blah, blah. And the bears really went after it hard this morning, first thing. The bell rang, they drove it under the low of yesterday, which increases the probability of the bear flags. They drove it under 400. They drove it under the low of last week. And then bulls saw a 4% bounce almost. And we keep closing over 400 psychological. And so the bulls are still defending that level. And at this point, it's a bear flag that confirmed with zero follow through, which is something I often look at for reversals. We did get a bearish reaction to AMD earnings after hours. Let's check in on that. It's a pretty solid drop there. On AMD, 94 has us testing the lows, so potential for lower lows on AMD. But NVDA only reacting a bit, and the bulls will try and shape up an hourly uptrend tomorrow to follow through on the daily bounce. It was a nice bounce, but we didn't confirm an hourly uptrend, so that still has to happen. Tesla, back over 200 psychological, pretty much an inside bar. We did break the low of yesterday by some pennies, but again, bulls have a lot of work to do because we can bounce and anything under 222 is just a lower high, which means we can bounce 10% and still be in a daily downtrend. Do we have an hourly uptrend? You can say so. But again, I need these bulls to show me something on the daily chart for momentum to be shifting. And a little green day is nice, but a lot more is needed. Healthcare joined in on the bounce, so daily stair-step drop, lower high every day for 10 days, broke bull. We know a daily lower high is the most likely result of this bounce, but it did not participate much in the bounce yesterday. It participated a little bit more today. ARKK did not participate yesterday. It participated today. IWM, hardly. It was green, but 164.83, and we broke it, but again, only 16 pennies. There's still 3 tops within pennies of each other the last few days. Bulls will take it, but it's still not an impressive bounce at this point. The financial sector bounce is impressive. They followed through after that V-shape from the extreme weakness on Friday into pretty solid strength the last 2 days. And here we are testing the top of this range from last week, 32.37 resistance, highest level we've seen there, and that was the high of today. And so that level is in play tomorrow. But the size of this bounce for XLF does have space to be watching for a daily trend change attempt. Because if you look at the retracement size from the high in mid-October, it is still only 382, but if you compare that to the NASDAQ, it's way more of a significant bounce at this point. Bulls definitely want more upside for space. We know we want 50% retracement plus to then be really confident that that daily high or low comes from here. And it looks like it's just over. I didn't have my magnets on. Just over. You get the idea. So a bit more needed, but it's the best looking major sector bounce at the moment out of XLF, XLV, QQQ. IWM, as I mentioned, bounce not impressive. You know, more so just trading sideways, but at least putting a temporary stop to the bleeding. And the biotech sector, pretty notable bounce. We broke the inside bar bearish, we hit fresh lows, and then we saw the V-shaped bounce. And for me, this is the most bullish day in the biotech sector in the last 2+ weeks. And the volume is the highest in 7 months. So that's really impressive volume. And again, the reason I'm watching the biotech sector is, number one, the healthcare sector had a 10-day stair-step drop. I'm looking for that bounce. And number two, the weekly RSI at historical bounce levels. And so that's a great start. Nice volume, nice move up. Still need the hourly trend change to the bulls tomorrow, but next hurdle is getting over daily EMA 12 resistance for the first time in almost 2 months to try and follow through. I had a trading day today where, you know, sometimes you have flow state and everything's clicking, you can do no wrong, and just money growing on trees from your fingertips in virtual cyberspace. Today I had an anti-flow state day where it just doesn't feel right. You don't feel it. I described it as like wearing a wet sweater. So Tesla, it started my morning with, I was watching this Tesla rising wedge, and I was determining, you know, do I want to short Tesla against 200 resistance or NVDA against $400 resistance? And Tesla got to 200 first, and it had this rising wedge at that point in time. And so I waited for a break of 200, and I wanted to see a break above 200 and then right back underneath it. So I shorted the break of 200, and then I covered some into this drop to then put my break even at like 240 cents. And then I set my stop at 201.01. And so then I stopped out, and my play was looking for 15-minute consolidation. So I stopped out right at the high, and it was a tiny loss, you know, a 10% day loser because I took some partial profit and because it was a top fishing play essentially. But then got the 15-minute pullback that I wanted. And so, you know, that would have been a solid half-day maker. And so I risk a 10% day loser, and it could have had a half-day maker, but got stopped out right at the high. Okay, no big deal. That happens. That's not enough to make me stop for the day, especially when it's such a small loss. So next was XBI. You know, I've been watching XBI for a bounce. Been talking about it for a few days now. And so I was looking at the V-shaped bounce recovery, and then right around here is when I said, okay, I'm now interested, bulls, because if we're coming off the low, bulls have to prove something to me. And there was relative strength versus the broader market. And this is where I was, all right, I'm looking for a bit of an aggressive entry. And so I entered for this 5-minute bull flag. And what kept throwing me off is I would enter on consolidation and we'd break resistance with zero follow through. So here's a new high of the day straight into a pullback, and a new high of the day straight into the pullback. And so that then had me cautious of 15-minute consolidation. So I made one attempt in here where I made an entry, bull break, no follow through, and then I stop out break even because, again, the bull break, no follow through is a red flag for me. All right, so now I got a 10% day loser and a break even. Then I recognize the 15-minute bull flag is trying to shape up. And so again, I do the same thing where, I make an entry. I don't know exactly where, but I make an entry and we break resistance with zero follow through right into consolidation. And so again, the last thing I want to do is, be long right before 15-minute consolidation. And at this point in time, the broader market is not proving bull strength to us. And so I stop out again, break even, because that's now a third new high of the day straight into a pullback. And then right as I stop out, we get the move I'm looking for. And then the bulls control the rest of the afternoon from there. And so at that point in time, say, all right, I don't have it. I'm not feeling confident and in flow state. And it's only a 10% day loser. Normally for me, I got to hit a day loser level, which is my max loss that I'll take for the day before I pack up shop. But I could just tell it's just an uncomfortable feeling. And so I figure I'll save myself a 90% day loser rather than clearly not feeling it and continuing to trade through it because I only have a 10% day loser. I'm just going to call it a day. And it also was a factor that, a bit lower volume, FOMC tomorrow. The market's waiting for that. But just wanted to give an example of a no flow day. And that's fine. See you tomorrow. It's always so much easier to just start with a fresh, clean slate the next day. MSOS daily oversold bounce underway, up 10%, and it's very unusual to be up 10% in this sector because it's so weak. And a lot of people speculating, why are we up 10%? Did a fund go under and have to cover shorts? To me, it's pretty logical to bounce from extreme oversold conditions, testing all-time low support. And I mean, the daily RSI was down at 23. Go back and look historically. We can get lower, but plenty of times we bounce from the low 20s. And the 4-hour RSI was down in the teens. So it's not surprising at all to bounce from extreme oversold conditions into your only support level. And so now what? Well, we have to see follow through, a higher low, and a higher high if anything is going to change. The bears are just patiently waiting for a daily lower high. Anything under 766 is a daily lower high. We can go another 10% tomorrow and still be looking for a daily lower high. Bears are waiting for hourly RSI to get overbought, and they're waiting for indications that the bounce is weakening. What we need to see for the bulls to prove to us that things are shifting is the first confirmed daily uptrend since we topped out. So again, we need to follow through a bit more, hold the low, confirm the daily uptrend. For that to happen, IWM and growth names need to be participating. The broader market needs to have some strength. And it's not a coincidence that IWM has been dropping for 2 weeks. And today was its first clear green day. Again, not a real strong day, but its first clear green day. Is that why MSOS is up 10%? No, but it helped. It's definitely a factor. So still a lot of work to be done. And, there's some trades to be had. Some of the more experienced traders buying the break of $5 psychological into extreme oversold, selling partial on the bounce, getting risk-free fairly quickly. But a lot of proving is needed for uptrends to confirm. And most people that are interested in this sector don't have a whole lot of trading experience. So just be real cautious trying to trade against the trend because it's even harder than trying to trade with the trend. The dollar had a big green day today. So daily higher low is set. Still trying to shape up this weekly bull flag. Of course, Powell is going to have a lot to do with what the dollar does tomorrow. But this big green day hit the metals hard and dropped them. And gold tested the high of last week, failed by $1 and change, and then just completely rolled over into weakness. And so now gold has a daily bull flag that confirmed straight into consolidation. Not ideal. And so again, depending on the FOMC reaction, going to be watching for the possibility that we're shaping up weekly consolidation, in which we will be looking for a weekly higher low with a lot of space for it to form. If you're bullish, you really want the bulls to hold weekly EMA 12 to keep that consolidation very healthy. Silver also rejected from resistance yesterday, so failed to break daily resistance and heading back down towards daily support. So we might need further weekly consolidation in silver as well. And the miners, same deal. New lows of consolidation, daily downtrend continues. have to form the weekly higher low, have not done so yet. Oil, bear follow through, inventory report tomorrow, knocking on the door of the recent low we got within 1%, less than 1% of 80.20 to try and confirm the weekly downtrend. Energy sector, trying to get a bounce going. We're going to be watching for that to set a daily low or high eventually. And natural gas bulls came out in a big way. We knew the daily higher low was most likely, and bulls showed up huge, just straight up. And so now what? Can the bulls break 3643? If not, we look for a 4-hour higher low. Maybe it gets cup and handily. That is a cup and handle. If this remains a bull flag of consolidation, it's a cup and handle continuation pattern, at least on the recent price action. So I'd say if 355 holds, well, let's go to the 4-hour. Watch that retracement size. So how do we measure a bull flag? Anything under 382 retracement or less. So if the bulls can hold 351, it's a possible 4-hour cup and handle. And we're trying to get this weekly bull cross of EMA 12 and 26 for the first time in a very long time. So big win for the bulls today. We'll see if they can top it off by trying to head back to the bounce highs in the coming week or two. Certainly getting chilly here. Although I guess I'm not using natural gas. Sorry. All right. Hope you're well. Do good things. We'll see what Powell brings tomorrow. Burden still on bulls on daily charts. A little bit of a relief bounce. We'll see if Powell can spark the bulls for follow-through.
So you just put them out in little rows. I've got 4 rows here going the whole way. It's probably going to be twice as much garlic as I grew this year. Cypress trees starting to turn. Crepe myrtle on fire. It's another cypress. Covered up, and now I'll only have to water it if it's drought-like conditions. Otherwise, it just does its own thing. I'll probably fertilize it once in the spring, and that'll be that.